Hey, Amanda, how are you doing?
I'm great, Charlene. How are you?
I'm doing very well. I'm so glad we can do another session on what's going on in the mortgage world and in the real estate world and how the two meet because they do. So,
Absolutely. They
what's
go hand in
happening?
hand.
Yeah, exactly. What's happening with the mortgage rates?
Yeah. So, in regards to the mortgage rates, we're still not doing anything with the variable. But on the bright side, we have seen two consistencies of the Bank of Canada in a row, and they did not raise rates. Now, the wording on the last Bank of Canada announcement really did indicate that they have no intention of dropping rates this year, potentially next year, but really until inflation's back down to 2%, rates will be staying higher on the Bank of Canada side. Luckily, that's not the same for the fixed side. So the fixed rates have been following the bond yields. So a lot of my clients have been going with the 3-year fixed rates. That's kind of a long enough period to kind of weather the storm of the higher rates we're in, but have them up for renewal when rates should be a lot lower.
Okay. So, what are we talking about? Like a on a 3-year fixed as opposed to a 5-year fixed?
Yeah, so that is a conversation that I've been having with a lot of my clients, especially anyone who's putting less than 20% down right now. So right now, for less than 20% down payment, the 3-year is around the 4.84 mark. So when we're doing it to qualify for the stress test, we're actually qualifying people on 6.84. So that is quite a big jump. Whereas the 5-year fixes, the bond yields have been pretty good lately, though we have lenders as low as 4.49. So when we're qualifying, people are qualifying on 6.49. So I have actually been doing a lot of two pre-approvals, one for my clients on that 3-year and one on that 5-year to give them the option. Because when you're qualifying on that lower interest rate, we have seen affordabilities jump by about a $30,000 increase. That for a lot of people in certain areas is the difference of buying a property that they actually want and selling for something less, or even just getting in the market to begin with.
Right. 30,000 is a huge difference.
It really is. And I always say to my clients, like, yes, you are going to be locked in for an extra 2 years at a higher rate. Not ideal, but if you actually look at the market that in the GTA and outside of the GTA, prices go up very quickly. That
Mm-hmm.
extra 2 years in the big grand scheme of things is not going to make or break it. Buying that home and getting that extra, say you buy now versus a year from now, that 1 year of prices going up, that is what's going to help you. Not having a lower purchase price at a to get a lower term, if that makes sense.
Right. No, that makes a lot of sense. So, I mean, it's good news for people who are actually out there physically, boots on the ground looking, right? And they want to be able to spend a certain amount of money, or they have a budget that is just like not enough in certain areas that
Yeah,
maybe they move a little bit outside of the GTA.
exactly. It's a good back pocket because you never know when that right house comes to the market. And knowing that you have that ability with the lower 5-year lower rate, never a bad thing.
Mm-hmm, mm-hmm.
Mhm.
Wow, that's really good news, actually. Do you think
Yeah.
I should lock in?
So everyone's a little bit different. Right now, any of my clients are an insured mortgage, so less than 20% down. Yes, it makes sense to lock in sometimes. Any of my clients that did 30-year plus rates, really were not seeing a big reason to lock in because those rates are not as low as what the insured rates are right now.
Right, right. Well,
Mhm.
that answers my question.
Good. So I had a question for you, Charlene. So
Mhm.
pre-construction, for I feel like the last couple of years I haven't heard a whole lot about pre-construction, but all of a sudden I'm getting tons of requests to do pre-construction letters because buildings seem to be popping up everywhere. So what exactly is going on
Oh my
on the world?
gosh. I'm glad you asked that question actually, because I have been I partnered with First Access Condo to bring premium properties first access to the buildings that are going up so that you'll be able to get in first. And it's really good opportunity for investors and people who want a second property in terms of the payment structure. So we all know you need 20% to buy an investment
Yeah.
property. Do you want to spend the 20% right away on a resale, or do you want to spend the 20% over 4 years in order to have a property built, like a condo build or whatever?
Absolutely.
Um, so it really is whatever is more comfortable for the person that's asking or the person that wants to invest.
Yeah. And
So there are good things and bad things on both ends. So
yeah,
20% over 4 years is 5% a year. And some people are able to manage that better than having the 20% right away.
I think one thing too, when you're doing it over time is a lot of, I think our clients together, we have together, they do secure line of credit. So they'll borrow from their secure line of credit on their primary resident. And it's not a huge payment right away off the bat. It's slowly going to build as they need the money. So it's a lot more affordable at the time being. And you're right, having it spread out, they're able to buy a new property and not be carrying that extra expense right away.
Right. And in 4 years, we know that the interest rate's not going to be this high.
Exactly.
So you don't
It's
have to qualify right away. You can, qualify in 4 years and you won't be as high of an interest rate. So,
Yeah, and I think also carrying costs. So carrying costs right now for condos are a lot more difficult because we do have the higher rate environment. Whereas 4 years, we're expecting rates to be a more normal level. So that will definitely help people's cash flow and
mhm,
having like your tenant cover your entire expense. Another
right.
thing with the pre-construction condos that we can do on the mortgage side is when you purchase your condo and it's time for closing, putting finance into a 1 year term. So at the end of the 1 year term, a lot of my clients are actually refinancing to take that initial deposit out. And then at that point, it's just pretty much 100% financed
Right. And paying back their line
line
of
of credit.
credit.
Yeah. And if there's more money available, pulling it out and putting it as a lump sum on their principal residence.
Right. And that's a good option. I actually never thought of that, but then that's why you do mortgages and I do real estate,
Why
right?
we partner, because we
You
bounce things off, we bounce each other's off, bounce ideas, oh my gosh, off of each other.
Yeah, that's true. And we've got a bunch of different projects coming up. There's Birchley Park at Victoria Park in Danforth. I
Yeah.
went to the launch for that last week and it looks amazing. I have price lists available. There's Kipling Station that's launching on Monday, which is huge because it's at Kipling Station. So
Yeah, right
it's
on the
got there's
PCC.
exactly there's a lot of opportunity there. I am working on Lake Point at Discovery Bay in Ajax. That is a low-rise building that's coming out mid-May
Yep.
and it looks amazing. I know I say amazing a lot, but
But it
I love
truly
these.
is.
Yeah, I like these pre-construction condos. They're actually a really good investment for your future. If you're talking
Absolutely.
about long-term wealth and running the numbers and doing it that way, it's a good investment.
Absolutely. They say real estate helps build generational wealth for sure. One
Generational wealth,
definitely helps with that.
exactly. Yeah, exactly.
Great.
Okay. Well, you know what? It was great talking to you, Amanda. Thank you for asking those questions. And thank you for all of your knowledge when it comes to rates and what we pay and what we shouldn't pay and what we don't pay and all of those things. So
No problem.
appreciate.
Thank you very much for having me. I'm always happy to share my mortgage knowledge.
Oh, that's great.